Let's start off on the budget front, because that budget came through for 2012, that midterm budget. And of course, this at a time where we're seeing growth forecasts being continually revising downwards. Looking at revenue projections, also revenue expected to fall back. This, of course, not a surprise. To what extent are they looking at a revenue shortfall at this point?
Well, I think, thank you. Yes, we have seen revenue being revised downwards in the midterm budget. But given that this is a country which cannot afford to have a deficit because we can't borrow from external markets, and neither can you borrow from the domestic, you find out that we are trying to match the revenue to expenditure. So I think there will be sort of expenditure reshifting in order to match the revenue envelope that is there.
Let's talk about the diamond sector if we're talking about revenues, because there is a big issue around not being able to get revenues from diamond sales. You're looking at production expected to increase to 12 million carats, and that's from the initial forecast of 9 million carats. So what is a government's target when it comes to revenue from the diamond sector?
Okay, surprisingly enough, it seems like diamond revenue has been revised downwards as well, regardless of the fact that production is going to increase. So this is sort of a puzzle to the market, because one would have thought that possibly with the upward revision in terms of diamond production, that should commensurately follow sort of some increased revenue to the fiscus, which is not the case in this one.
Overall, though, just looking positive on the mining front, with the sector expected to grow by 15% this year. Is this a positive sign that we're seeing the mining sector still growing, or could it have grown a lot more if we had factors like electricity in bigger supply?
True. Potentially, mining can surpass the growth rates that we are seeing right now. And this is in an environment where the mining houses are still constrained with power shortages, and they're still constrained with other infrastructure challenges, as well as the issues to do with water and so on and so on. So you find out that it's possible that our mining sector could really surpass the current production levels. And the 15%, it just represents, I think it's just benefiting from the international favorable prices for gold.
Yeah, and then when we talk about the agricultural sector, that has been hard hit by erratic rainfall, adverse weather patterns. It's something we're seeing globally right now. How is this going to impact the economy this year? To what extent is the agricultural sector now contracting?
To the extent that agriculture is one of the key sectors of the economy, it's the cornerstone actually for the economy. We anticipate from government's perspective a decline of close to 6%. And that decline is weighed down on the initial projection for the overall economy of 9.4%. So overall, the downward revision in economic projection from 9.4% to 5.6% is a result of agriculture, which is a major component in our GDP basket.
Okay, and then let's talk about the tax environment right now. Any key changes to duties, to taxes this year?
Sure. Government has revised upwards some excise duty on petrol and diesel. This is to try to compensate for the loss of revenue, as well as the government in this case was taking advantage of the low inflation that has prevailed in the market. We have witnessed inflation around 4% for the past 4 or so months. So I'm sure from that perspective, government has seen it fit to increase duty and in an attempt to raise a bit of revenue.
And James, very quickly, interesting that the government is looking to be a more active player in the bond market. Firstly, your views on this, and is there appetite from investors right now to invest in government T-bills and in other such bonds?
True. The market is starved of some tradable instruments right now. And any introduction of some of these instruments would be welcomed by the market, and we believe to some extent it would solve the liquidity challenges the banking sector is facing. Well, so we anticipate that as a positive change if it comes through.
That, of course, a welcome move. James, thanks so much for joining us today.
Thank you.
Have a great weekend. Yeah. James Wadi, Group Economist at BancABC.